we're going to step back, and I've asked the panel to really step back. We're not talking about where things are going in the next year, the next 2 years, but where is opportunity, and what are the challenges that face agriculture for the next 5 to 10 to 15 years? I'm thinking about the younger farmer who's getting in the business in their 30s and 40s and wondering, what did I get into? With these production costs, the demand, the export challenges. But there are opportunities, and that's what our panelists here are going to talk about. And it's going to be very quick. First of all, I'm going to introduce each member of the panel and ask them to talk a little bit about the sector, the two primary sectors that they work in, and that is maritime and aviation. And then we're going to hit into questions. I'm going to start with Devin Mogler, who is CEO of the National Oilseed Processors Association. Devin also he has a background in ethanol. I first got to know him when he was working on staff for Senator Joni Ernst and working in the RFS and going to the White House during the first Trump administration. So, Devin.
Thanks, Phil. I'm also a farm kid from Iowa and an Iowa State grad, so go Cyclones. So I help represent National Oilseed Processors Association. We represent all the soy crush in the U.S. as well as softseed crush, so canola, flaxseed, sunflower, et cetera. The sector's really expanding recently. We've invested over $6 billion over the past 4 years to expand capacity by over 25%, largely driven by the growth in renewable diesel demand, but that's on road today. Some of it's going into SAF. We see that as a big opportunity, as well as maritime. The important thing about renewable diesel is it's a drop-in fuel. You don't need different engines, and similar to SAF, you don't need different engines, which is the biggest thing, so you don't have the infrastructure challenges that you might have with ethanol that has plagued that over the years. So really excited about the growth that we're having today. Looking forward to an RVO announcement, knock on wood, later this week. I know we've been saying that for the past 2 months, but also excited about where things are going for RD, for SAF, and for maritime.
Thank you. And now we're going to dig in a little bit, start to dig in a little bit into the maritime opportunity. Starting with Lou Sola, who's partner of Tom Run Partners, and particularly important for this panel, he's a former member of the Federal Maritime Commission.
Thank you very much. It's very nice to be here. And let me start out by saying that I'm a master mariner, and I've sailed all over the world, and I was chairman of the Federal Maritime Commission. But I started walking beans in Goodland, Indiana, and detasseling corn. So, and when I go home, sometimes I look at the grain elevator and the price on there, and I think that the lights are broke because they're basically at the same price as when I was in high school. So to find new markets and to go ahead and put these out there, I think is very important. As far as maritime goes, I'd like to say that, yes, I have sailed, and at the Federal Maritime Commission, I oversaw like $5 trillion a year of goods going in the country and leaving the country on all sorts of modes of transportation, not only on the maritime, but also on the railroad and the trucking that has to do with our ports. And I think there's a tremendous opportunity now for the energy sector to go ahead and tie in to what we want to do. And that's basically coming from the International Maritime Organization. And they put out mandates that they want to lower the carbon intensity of our fuels. And I've been working with the Defense Laboratory and some of the others, and we're able to do that by some sort of mix that we do with traditional fuels and with bio.
Okay, thanks, Lou. Next, Ben Kruger, CEO of Raceline Renewables. We've heard a little bit about Raceline already, but take it away, Ben.
Yeah, thank you so much. Yeah, and Raceline, we stand at the intersection of ag, energy, and conservation. And, of course, you heard about our vision this morning of trying to restore 30 million acres of native tallgrass prairie and marginal lands, which we see as something that's vital for the regenerative systems that can not only sustain current high levels of productivity, but enhance it in the future as the world's calorie needs grow, but also bioenergy. Raceline is one of the largest renewable natural gas producers in North America. We're interested in the prairie for the feedstock and biomass it can provide. But if there's one thing I guess we're excited to talk about this morning here, and it's the opportunity that the U.S. ag economy has before it with maritime. Later this year, the world will get together and consider a possible first ever framework that, if voted on successfully, could bring as much as $10 to $15 billion of new demand to U.S. ag within 5 years. Said a different way, this would be like turning on a market that would be 2 to 3 times the size of the entire soybean crop in the state of Iowa. So super material, and at a time when we really, really need it, as was evidenced on some of the slides earlier. So we're excited for this. We'll share more as we get into the panel. We would have one ask for the room, and that would be this: if you're read in on this issue, we'd ask you to lean in. Ag is really starting to come together around this issue. A variety of coalitions are being formed, including the American Biofuels Marine Initiative. If you're not read in, use today to get your baseline up and figure out where you stand. So thank you.
Thank you, Ben. Now we'll turn to Ann Steckel. Is principal of Ardent Strategies and a consultant in the biogas sector as well as in ag broadly.
Thanks so much, Phil. Good morning, everyone. Pleasure to be here today. So it's interesting. I represent farmers, biofuels producers, and some end users. And from the farmer perspective, we see so much advantage and opportunity when it comes to SAF and marine applications. Certainly, there's been so much dynamic times going on right now, and you asked us to look forward, but it's hard when I'm looking at oil prices today and gas prices today and not thinking about all of the opportunities that domestic utilization and production of biofuels brings for our farmers. And so I'm pleased to be here today. Look forward to digging in more about our opportunities for marine and SAF in the future.
Okay, thanks, Ann. And finally, but hardly least, Tom Michaels, Director of Government Affairs for United Airlines, and we'll move to talking a little bit about aviation.
Good morning, everybody. Thanks for having me here. Unlike many of the folks here, I'm not a farm kid, but like United, I'm an avid consumer of the products. My primary mission here today is to talk about the market opportunity that SAF represents. We use a lot of fuel in the aviation sector, and that sector is highly resistant to electrification. It's just not feasible and not going to be feasible to take people across the Atlantic on an aircraft powered by batteries. We really do need liquid fuel to do that, and we use a lot of it. Each year, United uses about 4 billion gallons of fuel. Overall, in the U.S., we use about 26 billion gallons of fuel this past year, and we expect that, and globally, that's about 96 billion gallons, and we expect that to go up steadily as far out into the future as we can predict. That market is nearly totally unserved by biofuels, which we call SAF in our application. We are getting started. We made about 1% of our fuel from SAF this past year, which is a huge increase over where we were just a few years ago. But we really do see that demand exploding, and that's really exciting, I think, for the ag sector, because while currently most of that fuel is derived from waste products like fats, oils, and greases, there's a hard limit on how much of that is out there, and we're going to need crop-based feedstocks to feed that demand. And so we think it's a really exciting time for collaboration with the ag sector, and can't wait to get to the meat of the subject here with you.
Terrific. Well, we're going to get into some of the policy things that market signals that you need to see happen in these sectors. But I want to start off by drilling a little bit more down into the maritime and the issue of the International Maritime Organization and the emission standards. That there was a lot of optimism last year going in. The goalposts at least got moved at least a year. Lou, could you start off and tell us, are we going to see those? What are the prospects? So the administration seemed to be very strongly opposed to those carbon-based emission standards, which are so important.
Yeah, thank you for the question. I don't think that the administration was opposed to the carbon standards. I think they were opposed to the proposal as it was done. And the way that the proposal was written would not benefit anybody here in the room. It would have benefited basically Europe and the Middle East because they have a transportation fee on there that they went ahead onto the calculation. And what we're doing now is we're trying to advocate as much as we can so that biofuels and traditional LNG that we use here are also included. Because the way that it was written, it was completely discriminatory against U.S. producers of any type of fuel whatsoever. And the reason for that is because we are able to service less than 1% of all the ocean vessels calling on the United States right now because we don't have the bunkering facilities. So they have those facilities in Rotterdam, they have them in Singapore, but we just don't have those here yet. And hopefully, with the Maritime Action Plan that just came out and the billions of dollars that are going to be invested, we can actually put some of those facilities here. And let me give you a point in context that we have. That today, bio-LNG is cheaper in Texas than traditional LNG is in Europe. So we have a product, we have a price, and now we have to get it out there. And I think the administration did very well not to support the past proposal, and we're trying to make it better.
When will we see some action on that?
There's action right now. Mm-hmm. So what they have is they have different working groups going through the International Maritime Organization. It's not just the United States. There's many other countries. And the countries that have a lot of power are the countries that have a lot of tonnage. They have a lot of flags. So those are Panama, Liberia, Bahamas, Singapore. Those are the ones that have the majority of the votes. It's almost kind of like the U.S. Senate. Everybody has 2 votes, and then you have a vote depending on how much tonnage that you have. And there's been a proposal that was put forward between Panama, Liberia, and Argentina that came forward that kind of puts the guide rails in there, and it also talks about biofuels. So the United States has not come out with a position yet, but I'm very optimistic that they're going to push biofuels into it.
Okay. Well, let's talk about the opportunity for biofuels in maritime. Start with you, Ben. What both biogas and bring Devin into this as well. But if you could start out talking about what's the opportunity in terms, what kind of market are we talking about potentially for biogas?
Well, very material, and I think it's really it's a market that's there for. We're going to need all forms of bioenergy to really serve it if we get it right. Ethanol into methanol, biodiesel or renewable diesel, and biogas. As I mentioned earlier, we think within 5 years this could be a $10 to $15 billion a year market. You can do the math on that, and that's something that's quite material on the order of approaching kind of RFS levels. So it's this new market we need. One of the biggest opportunities we've seen in decades and might see for decades to come. I think it is worth noting as well, if you click it one level higher than just biofuels, this is something that's good for the overall U.S. economy in multiple sectors. There's 10 to 15 billion for ag and more. There's 5 to 10 a year for fossil LNG, so oil and gas and traditional energy. And then there's another, pick a number, it could be as much as 20 billion or more a year for building new ships with flex fuel technology, the infrastructure that Lou mentioned that we need for bunkering, and on and on and on. And so is there a slight cost for some of this? Yes, of course, but there's a return that's like 10x what the value is. And for farmers, when you look at their lot in life, and domestic demand is kind of outside of the RFS is flat at best, if not declining. Brazil, obviously, on the slides earlier, they are clearly out-competing us for soy exports into China, and they might have another couple billion bushels in the next 10 years. It would be half the size of our crop. Our costs are up, labor's hard, so we need a new market, and this is one that really can turn things around quickly if we get it right.
Yeah, Ben mentioned that, the RFS levels. 2025 was 3.35 billion gallons for biomass-based diesel, so that's inclusive of biodiesel and RD. The proposal we're expecting to see later this week should have a 5 at the front of it, so a dramatic increase, a step change, which is good for all of U.S. ag, particularly for soybean and softseed farmers. But we need to find new markets at some point beyond surface transportation.
If I could just tag on to that, something that we've all been kind of alluding to, the way that we're going to get there is through really solid, well thought out policy and how we're driving things into the future, the 5, 10, 15 years that you mentioned earlier. We need to really think about that from a today perspective and establishing the right policy. We are really encouraged about the RVOs that Devin mentioned. I think that'll be a monumentous step. But opening new markets like SAF and marine is really where we need to be visionary from an agricultural perspective.
And Ann threw up that softball, so I'm going to whack at it. I think what we saw with the One Big Beautiful Bill and the extension of the 45Z tax credit was really important. There was a change to that credit, unfortunately, in addition to the extension that I think was a slight setback for us, which was the reduction in the credit value for SAF. I really think for these new markets, it's important to send that price signal out. We saw with the SAF blenders tax credit that had been included in the IRA, a very significant market response to that. You saw major refiners getting into this business, making billion-dollar investments in refining capacity. Those investments are just, the two big ones that I'm thinking of. One is owned by P66. The other one is Valero and Darling Ingredients. Those represent a massive new demand for agricultural products. Today, that's primarily distillers corn oil, but there will be soybean oil demand that's flowing into those. And you will feel that quickly in the markets, but you do need that tax incentive there to make it all make sense. And so that's one change that we're hoping that our members of Congress in their wisdom will revisit in the near future, is to restore that full value of the SAF credit and really kick off that market. Just one little bit of perspective, United got involved in SAF back in 2010, and we did so when oil went from $100 a barrel to $150 a barrel in less than a year. Over the past 2 weeks, we've seen our fuel bills double. That's fuel that we're using today on tickets that we sold weeks and months ago, right? And so we're eating those costs, and I think you're going to see that across the aviation sector. And that really, I think, confirms our decisions to make big investments into the SAF sector, and I think that it hopefully should confirm for everybody in this room that the market is real. It's something we're going to have to continue to move towards. We can't manage that sort of volatility.
Well, you bring up a question. My next question was going to be, what policy changes do you need to see, and how do you ensure bipartisan support for the policies that you get? Because we've seen what happens when you go from one administration to the next, and I don't know that any industry can have that sort of volatility in terms of if you need that government support. You mentioned the 45Z, the Clean Fuels Production Tax Credit created by the Inflation Reduction Act. I believe you had an extra 75 cents a gallon premium for SAF.
Call it extra.
Extra. Incentive. That's gone down. It's a straight $1. You've still got a gap, don't you, in terms of the premium that's paid for, that you have to, as an airline, you have to pay for SAF. How do you close that gap?
Yes, there's a significant gap. Primarily the issue is that it does cost a little bit more to make SAF, right? It involves additional hydrotreating. You need additional facilities beyond what you would use. You essentially make renewable diesel first, and then you have to continue processing to create that jet fuel, the SAF. And so we really do need that for it to make sense for the producers and for the airlines. There's still a significant premium on that fuel when it gets to the airline, even post-incentives. We've been working with our customers primarily, and this, I think, also speaks to what the appeal is on a bipartisan basis, right? It's not just about energy security. It is about cleaner fuels. It is about lower carbon, and I think we've had strong support for that from both sides of the aisle. And certainly, it's a business imperative for large companies that use our product every day. for a lot of companies, if you think about these big consulting houses, they fly people all over the world. These road warriors that get 1 million milers on United. Their biggest source of emissions is their travel on United. And so they're willing to pay a little bit more for their fuel when that fuel is lower carbon. And so getting that carbon number down is critical. That's really critical to the success of the ag inputs into it. So that's really what we're working on together in collaboration with our customers and with our suppliers every day.
Okay, we'll come back to that, but I wanted to move in terms of policy changes, Devin, and then in the biogas maritime.
Yeah, sticking with 45Z for a minute, I think it's worth noting, taking a step back and remembering the Inflation Reduction Act in 2022 was passed by all Democrats, signed into law by a Democratic president. Fast forward to last year, the 45Z credit was improved and extended by all Republicans in Congress, signed into law by a Republican president. So I think there's a bipartisan aspect to that. And meanwhile, this is while solar and wind and EV credits were being stripped out of the bill. So I think there's pretty solid support for that. It does need improvements going forward, plussing back up the SAF portion of the credit. When you look at the biofuel credit stack as it exists today, you got the RFS, the RIN credit, you've got the federal tax credit, 45Z, and then you've got state incentives like LCFS and other state incentives. You add up those last two and they don't even equal the value of the RFS. The RVO, the RIN value, is what does the heavy lifting in bringing these fuels to market. So I think the world we live in today, that's still the most important piece of policy, but getting the tax credits right is certainly important.
What on the biogas sector and maritime? What are the crucial? We've already talked about the IMO standards, but
yeah, there's some similar themes. I think there's a lot of bipartisan support for things we're doing in biogas. When you think about it, it's about energy security, rural economic development. It really is part of food security, conservation. These are not red or blue things; these are American things, and I think people realize that. And so there's been good support. We'll get an RVO soon on the domestic side. Certainly, the tax credit situation, if we get the final accounting right, can be very, very helpful. We need help on the world stage with maritime. I'll let Louis fill in a little bit more on that. But I think as well, part of the bipartisan aspect as well is our farmers. Most of our farm states are swing states. So when people do election math and realize, like the state of Wisconsin, where I'm from and grew up on a dairy farm, there's 50,000 people that are directly employed either as part of dairy farms or otherwise. The election was won by 30,000 votes. So I think people pay attention to that and want to get it right for the farmers generally.
Yeah, and if I can just add, a lot of things in agriculture aren't partisan. They may be more regional. And I think through the biofuels policy, we've seen this, right? In the Midwest, where the producers are, where folks are that may be growing the feedstocks used to make the biofuels, you see strong support. And it doesn't matter if you're a Republican or a Democrat, because if you want to get reelected in a lot of those states, this is a yes issue for whoever. What we had seen historically is some of the oil patch states showing some resistance to market penetration. Now what we've seen is a lot of joint ventures and diversification, as Tom mentioned earlier. So what we're starting to see is a more broad-based appreciation for biofuels, and I think that really sits us and puts us in a good position moving forward. Obviously, agriculture understands the importance of it. We've got some short-term policy we're really hoping to get out the door, like the RVO, E15. I was at the hearing last week, National Farmers Union, along with a number of other groups, were testifying in front of Senate Ag. And if I had counted the amount of times people said E15, and I got $1 for all of that, I'd be buying myself a new pair of shoes. So, I mean, we should be there right now. And so hopefully we can get those things accomplished quickly.
I want to turn to another issue. I think we have a question about it. Devin, and that's, are we past the food versus fuel discussion because of where agriculture is structurally? If not, how does that play into, how do you address that on the Hill?
I mean, this isn't something we've heard a lot of lately. You know, as you mentioned earlier, I spent a better part of a decade on the ethanol side of the business, and people forget that when you're turning a corn kernel into ethanol, you're fermenting the starch portion of it. You still got the fiber, you still have the oil, you still have the protein to serve as livestock feed. And the story's similar on the soybean side. The soybean's only 20% oil. That's what we're using for food or for biofuels feedstocks. but the other 80% is protein. Remember that slide, the poll Sarah did earlier at the start of this? Why are poultry and livestock farmers having fun this year? Because they got cheap soybean meal. That's because we're crushing a lot more soybeans here, keeping those prices down, keeping affordability for not just poultry, but pork, for eggs, for dairy as well. So I think there's a good story to tell here. It just sometimes gets misconstrued, generally overseas.
I'm going to add to that one really quick. I think from my former life working at Cargill, the food fuel thing was a big deal. And I think there's two other things to keep in mind which I think are helpful. One, with the evolution of alternative oil seeds, so things like camelina and carinata, we're finding more ways to get more productivity out of the land, more oil per acre in a way, which is not prejudicial to food acres. And then the other one is just the overall productivity of the U.S. farmer. I think I saw a chart from the USDA some weeks ago. We're now, of course, every year new record production, but new records in production, but doing this on less land. So like 20 million acres of less land than we've used for farmland since 2000 or something like that. So highly productive farmers, more ways to get there, and I think both can be true.
Yeah.
I think that's right. I mean, we're growing, more crop on fewer acres every year, sort of ad nauseum. And I think also as we, really instill these new agricultural practices into, everyday business, there's a lot of good economic incentives to do this, right? You're making your land more productive, and we of course see that in steadily reducing carbon intensity, right? That's sort of like the easy way to detect that is working, and so we don't really see a significant issue here. And I think as the science gets better on assessing what those impacts really are, we see that they're much more alleged than demonstrated, right? And so
Yeah, two questions on area for you, Tom. There's been interest in the airlines and developing some of these minor oil seeds. We've heard talk about camelina, a variety of canola that could grow in the South, some other crops. What are the prospects for those in terms of coming onto the market, providing a new source of veg oils for SAF? And sort of related to that, and probably in the 45Z, is the administration, do you think they are going to provide the incentives to farmers to get that CI score down, that carbon intensity score down to where you need it?
Well, the 45Z credit is a performance-based credit, right? The lower your CI is, the higher the dollar value is of that tax credit. So that's a very direct incentive. Additionally, we are eagerly awaiting guidance from USDA for that tax credit around the crediting of these agricultural practices that served to achieve that end. And so I think I expect to see those soon, and I think they'll send, again, a clear, strong signal of how everybody in this room can do that. In terms of what the role for some of these newer oilseed crops are, I'm probably the wrong person to speak to that. As I mentioned, I'm not a farmer. But we are very eagerly interested in that market developing. I mean, ultimately, we look at the cost of the fuel, we look at the carbon intensity, and those two things are really what we can watch and we can kind of guide and control. But I think we have increasingly strong confidence in the ag sector to be able to achieve those things. I saw a video from Bayer right before we came on. I've seen demonstrations of the technologies that folks have to not only achieve these things, but to prove they achieve them, right? To demonstrate that the soil carbon sequestration and so forth is doing what they claim it can do. And so I think the more we kind of build awareness and education of what's out there, I think the stronger, again, the market opportunity will be for the agricultural sector in the U.S.
Okay.
If I can add a little there.
Okay.
So, I mentioned earlier soybeans 20% oil. Some of these soft seeds are 35 to 40% oil. And of the soybean bushel today, the oil represents half of the value. So that's why you saw some of these new crush plants that were built over the past few years are switch plants, so they can run either or. And the idea being, as the acreage moves up for some of these other crops that we're prepared to meet that, have the crush capacity there for it. Today, we plant, 3 million acres of canola compared to 80+ million of soy. So it's not close yet, but it's the future.
Lou, we lost our slide of questions here, but we had a question about IMO, and the question was, I think, whether the IMO is sufficiently listening to the U.S. concerns and the sector.
There's no question that the IMO is listening to the U.S. concern, especially what happened after the vote that we had last September and October. And we're trying to put forward a proposal that's going to be good for biogas. And let me touch on a couple other things. That maritime is definitely regional and not by party. I'm a unicorn. I was nominated by Trump, Biden, and Trump. So there's not very many of those people around. And I think we're much more geographical. You'll see that, for example, we have the Jones Act that's very strong in Louisiana and Mississippi, where it's not so strong up in the New England, and we just had a suspension of the Jones Act. What I would like to say is that a lot of these companies that are sending their ships here, these are foreign companies. And they have already made the investment into the infrastructure, into their engines. Almost every single cruise ship today, every single cargo carrier that you see out there is a dual fuel. It is ready for drop-in bio-LNG today. So when we see those, we should look at that as an opportunity of a market because we're not servicing them. And I think that is the message that we're trying to get across to the administration, that this is an untapped market, and I think they're getting it.
Mm-hmm. Can I just... You mentioned something I think is really important. The demand for jet fuel in the United States is supposed to jump from 26 billion gallons today to about 31 billion. So that's a very steady increase, but it's not sort of shocking. Globally, however, we're going to go from 96 billion gallons of jet fuel demand today to 215 billion gallons of jet fuel demand in the 2050 time frame. And about 69% of that is coming from Asia and Southeast Asia. And so you're going to see a tremendous export opportunity for these fuels abroad. And I think we have to kind of keep our eyes on that prize when we're investing in our infrastructure today. We're not just serving the U.S. market, we're serving a global market here, and it's really an exciting time.
And if I could touch on that, every time that we put fuel into a ship, it's considered an export, because it's going somewhere else. So, I mean, that opens up a lot of different financing for us, whether it's DFC, United States Export Bank. We have a lot of different opportunities because of those exports.
Devin, I want to touch on a sector of the biomass-based diesel. So much of the growth has been in renewable diesel, drop-in fuel, obviously. And many of the biodiesel producers have struggled in recent years. Where is there a place for them in these new sectors?
Yeah, there's certainly a role for biodiesel. I mean, that's what this industry was built on. The growth has come from RD because of the ability to be a drop-in fuel, so it's easier. The infrastructure investments are much higher on the RD side, much higher CapEx compared to a biodiesel plant. We're talking, $1 billion to build one, as opposed to, maybe 40 or 50 million. So there's certainly an opportunity for biodiesel to play a role, but the reason they struggled in 2025, maybe the worst year that the industry has ever had, was a combination of an expiring tax credit, 40B, transitioning to 45Z, where we didn't have clear rules of the road, coupled with a lower RVO number. That 3.35 that was set for last year is dramatically below what the capacity is, not only for domestic crush and feedstock availability, but also for production capability. So it was just kind of a perfect storm that made 2025 so ugly for biodiesel.
If I could just tag on to that too, it has been very difficult for biodiesel because of the lack of the tax credit. And then 45Z regs haven't come out. So many of these producers unfortunately idled, which was very difficult because that reduced the soybean demand, which then affected the farmers. So all down the line, you saw this very negative pull. So we're very hopeful that either 45Z can get implemented in a way that makes sense, or we revisit previous policies of biofuels credits moving forward. But something needs to happen. Obviously, a robust RVO would certainly be a step in the right direction, and we are cautiously optimistic that we will get those great numbers that I think will start moving the industry forward. But it has been a very difficult road for biodiesel. Many of the farmers are invested in biodiesel too, and co-ops and things of that nature. So it just kind of has further exacerbated the entirety of the chain.
I do think there's a real symbiotic relationship amongst these fuels, though. For example, most SAF is produced in conjunction with renewable diesel, and so to the extent that you're producing SAF and not that RD, those RD volumes need to be backfilled by biodiesel. And so I do see all ships rising together there, and I think that similarly we'll see that as marine demand takes off. The more that we can give these fuel producers, who haven't been having an easy time of it either, I think, additional value-added products and markets to sell into, I think the more all of us will succeed in this room together.
Okay. Got another question for you. We'll come back to you, Tom. But, Ben, I wanted to ask you, about a quarter, I think, of renewable natural gas now comes from swine and cattle operations, dairy, I would guess primarily. What's the growth potential there?
Yeah, it's absolutely huge. Yeah. So in renewable natural gas, we're a waste-based feedstock mix for the most part, which is great because we can be there.
So that comes from landfill?
Yeah, landfill gas, but also from agricultural waste, residues, other things like that. Animal manure, we capture the methane off of. We can process cellulosic feedstocks. We've done some math. I think Tom Richards is here in the room somewhere. I think we think there's enough feedstock that there can be anywhere between 15 to 20% of the country's natural gas could be renewable natural gas if the right policy signals are in place. So it's absolutely huge. We don't have a feedstock problem. We do have waste problems, so that's where the value of our industry comes in, is we are upcycling, valorizing, taking things that are really not being used and putting them to better use.
And if I could just jump in, I think that what you're talking about really underscores the importance of the potential growth within the marine market. Because if we look at renewable natural gas and those vehicles that are powered by renewable natural gas, there's a finite amount of them so far. I think people are really diversifying. I know Cummins is doing a new engine that will continue to allow growth within the on-road space. But as we look towards the future and how our farmers and producers can really benefit, we have to have that next market, because we don't have any natural gas powered vehicles, cars that are on the road. It's all like larger trash trucks and things like that, larger vehicles. So this is a really great space for us to grow into.
And Ben, I wanted to follow up real quick on those policy signals beyond ones we've talked about. Are there others that need to happen to have that kind of growth that you're talking about?
The really big ones, yeah, I'll just be consistent with the ask. We've got to get maritime right. In fact, in some cases, if we don't get maritime right, globally, there's a risk it will devolve into regional programs, and the U.S. will get shut. We'll pay for it as a country. We'll pay for Europe and Asia and maybe Brazil's decarbonization, but we won't get the biofuel benefit or the fossil LNG benefit or the shipping benefit. So we do have to, there's things we have to get better to make that a better deal for the U.S., but we do have to get something right globally. So, that's our top priority by a long shot. And the others are important. We would like to see more growth in the RVO. I think we've been a little bit concerned about how the demand calculations are done in that space, but we think there's a lot more room for the RVO to grow there too, and optimistic that over time we can see it.
Tom, we have a question about state incentives. There are a handful of states, I believe, have additional tax credits that you can stack on with potentially 45Z. Where are you on those, and to what extent are they going to enhance crop-based stocks?
Yeah, thanks. We're very supportive of those incentives. Certainly the most powerful one, kind of by far, I think today, is a fairly recently enacted Illinois SAF tax credit. Very exciting. It's a long-term credit. It's straightforward. It's $1.50 a gallon. And it is taken against our fuel taxes in the state of Illinois, which happen to be among the higher fuel taxes in the country. And it has driven very significant demand for SAF, and it allowed us basically to double our SAF consumption from 2024 to 2025, and I think we'll see comparable growth in 2026 when all is said and done. Those are tremendously important, and again, this ability to have kind of an incentive stack on which you're relying. It's also, by the way, helping us establish new supply lines, right? A major issue with many airports around the country is that they might be served by only one pipeline, and getting space on that pipeline is highly competitive, and then sometimes there are issues, and you wind up having to truck fuel in. It's a real significant and kind of perennial concern for us at a lot of our major hubs. Again, thinking back to like, why did we get into this before? And it's really about that resilience in the face of disruption. And what we're seeing is with SAF that we're establishing new supply lines, right? That are coming in either from different refineries, via different pipelines, or via rail, or different modes. And so they're opening up, a backup basically for those airports for us, and that's really important in terms of the value that we see in this space.
Okay. We're going to have to wrap up here, but I want to ask each of you real quick, make your prediction. Where are we going to be? Where's your sector going to be in 2030 and 2035? So I'm going to start with you, Ben. In the renewable natural gas, where is that going to be in terms of production and usage?
Yeah, well, if Louis and I can get our way, we'll be on a lot of ships. So we'll be hopefully. We're a market today that's growing at high single-digit growth rates to low double digits. I think that curve continues, but it can tilt up if we get the policy pieces right on maritime.
I'd like to second that. And then when I'm in Miami and I look at the 10 cruise ships that are lined up there, each one of them take, for example, 7,000 cubic meters of LNG, and we only have one bunker vessel there at 2,000. So it can only go once a week. So I'd like to see 3 or 4 more vessels there that are able to provide the fuels.
I'm going to start by looking backwards. Trump 45 trade war with China. We were exporting 3 out of every 5 rows of soybeans to China. Fast forward to today, we're exporting 3 out of every 5 rows, half of which are going to China. Today, we're only exporting 2 out of every 5 rows because we're processing more domestically. I think that's good for America. I think it reduces our dependence on a foreign power, and it adds value for farmers here at home. So I think the future is bright for continuing to add value here.
And from the agricultural perspective, I mean, if we look at where we were when the RFS started in 2005 and then 2007, and how much we've grown and how much domestic utilization we're providing, and that's a very important part of the agricultural value stream, are policies that are beneficial for biofuels. So if I think creatively looking forward, there's nowhere to go but up.
Predictions are hard, especially about the future. I think that a lot of what 2030 and certainly 2050 looks like does depend on the policy prescriptions that we pursue today. I'm an optimist, so I think everybody's going to listen to us, and we're going to see those changes that we're supporting. The Devin has mentioned, and I have been harping on with 45Z. Our target was about 10% SAF uptake in 2030 and roughly 100% by 2050. I think it's going to be hard to meet those, but I think we're actually going to be closer, hopefully, than a lot of people think. And I think, if you do see those kinds of numbers materialize, you're going to feel that at every farm in the country, and it'll be a very positive uplift.
Thank you.